Good morning, everyone. Welcome back to the show. My name is Michael Ribello. I'm a 20-year-old entrepreneur who chose entrepreneurship over the traditional college path. I'm inspired and driven by my goal to retire my mother and to help other people like her on Main Street America and Middle America to learn about and invest in multifamily real estate to build long-lasting financial freedom. And today I'm going to introduce Grant Warden really quick. He is very similar mindset to me and Russell Gray with the retail investor standpoint. What is the retail investor standpoint? Very much what we talk about here on the Main Street Media Network. Basically your butcher, your baker, and your candlestick maker, Middle America, pretty much. And what is our perspective? You have a lot of people like Brian London, Peter Schiff, Adrian Day, Brent Johnson, who are economists, leading economists, that know what they're talking about, but we don't. So now we're going to get the perspective of Grant Warden, who's been following the Real Estate Guys radio show for a long time. He knows Robert Helms and a big fan of Russell Gray. So Grant, thank you so much for your time today. It's a pleasure.
You're welcome. Thanks for having me.
Of course, pleasure's mine. So Grant, you and I were talking briefly. We in fact met here at the booth yesterday, and we're just chatting about the retail investor's standpoint. And I would love for you to, kind of give us your background. What is your perspective of the retail investor standpoint, and kind of what chose you to go down the ownership and Main Street path, and why you think that's very important for you?
Absolutely. Thanks for the opportunity here. Looking forward to having this conversation. There's a lot to cover when you talk about a retail investor. That's probably an umbrella term, and you could talk about lots of things underneath that umbrella. But part of it is, you talked about this idea of ownership. What does that really mean? And ownership and accountability is a phrase I use a lot in my previous work, and I think about it in lots of other aspects of my life. But as it relates to what we're talking about here, it's really about, I think, knowing what you're doing as an investor and why. And you mentioned that as far as the passive investing, what people often refer to, which is that you just don't really pay attention to it. Maybe you only have a 401k through your employer, and you look at your statements maybe once a year, and that's about it.
Right.
But many people probably could not even tell you what their investments are in, and more importantly, why. What is it actually doing for you? Target funds, ETFs, passive income flows have really dominated the personal financial investing space for the last several years. So the age of active investing has kind of waned, I think.
Right.
However, that's a good segue, because one of my mentors, who shares my name actually, Grant Williams, has presented here before at this conference. And he talks about the need, or the swing back, I think, towards a more active investing approach. And the reason why, without getting into too much detail, is that many of your listeners out there may know that when you're doing passive investing, especially with target funds, the managers of these funds are often just algorithms. People are not actually looking at these on a regular basis.
Right.
And the algorithms trigger mandatory buys and sells based upon certain percentages or allocations or other metrics within the ETF or the mutual fund. And that's why we've seen such a high concentration of money in the Magnificent Seven. This is a topic you've probably been having or talking about with other people on this channel. And the over-concentration of those companies. But what happens is that they have to be bought because they have to maintain a certain percentage within the portfolio, so it's just triggered automatically. And many people out there have also maybe heard that for a while there, the bottom 490 of the S&P 500 were actually underperforming, right? So when you have a situation where the top 10% of, or top 10 of 500 is basically carrying the entire index along, is that a good thing? Subjective, I suppose. If you're making money, people probably don't care. But this goes to this idea that we're talking about of, do you really know what is in there? And we all know that many people don't have the time or bandwidth or aptitude to really pay attention to this kind of thing. But we can probably bring that home a little bit more with this conference, how it relates to investing in gold and silver, because that's a whole different animal than doing something like your 401k mutual fund.
Right.
But I'll just pause there and say that I think back to Grant Williams was saying that he thinks that a more active approach is probably going to be warranted going forward. And that means not only financial advisors taking a more active role and not just relying on mutual funds and ETFs, but the individual ultimately, for anybody watching, it's your money. So you want to know what it's doing for you.
Absolutely. First of all, Grant, thank you for sharing that. And I completely agree. I feel like the facade almost of the passive route, I feel like it's just isn't cutting it anymore because I feel like people are getting too passive to the point where they don't even know where their money is going. In fact, with me being multifamily real estate, there's a lot of people saying, oh, I don't want to upset the apple cart with my 401k or anything. I'm like, well, do you know who's managing that? No. Well, okay, where's your money being placed? I don't know. I just trust my stockbroker.
Yeah.
Have you even talked to your stockbroker? No. And I just start to itch.
Yeah.
So do you feel like the general populace of the United States, and not just the United States in general, has gone more of a passive route than an active route? Has the general populace been active before, or have they just become from active to more passive, and you think that cycle is going to come back into the more active again?
Yeah. They're very, very passive, absolutely. And that trend has been going on for many years. Interestingly, I used to be a financial advisor maybe 20, 30 years ago. So at the time, this is the 90s, and there were mutual funds, I remember, just as a quick aside, that had averaged 13, 14% over the previous 10 years. And part of me said, how is that possible? And if you extrapolated that and you said, you put in $300 a month for the next 30 years at 14%, you're going to be a multimillionaire. And I thought, that just doesn't sound right. Something's not quite happening there. Now, why was that? That's probably a different conversation. It really relates to the interest rate environment in this country over the last 40 years. It's been on a continuous decline, so stocks are up, bonds are up. It really artificially buoyed the market, I think. But the trend is, or has been, from active to passive. And I'll give an example that you may not understand because you're too young to remember this, but I have a little bit of wisdom on my side, and I'll talk to people out there who are maybe other baby boomers like myself or late Gen X people. Think about what it meant to have a stockbroker in 1980. You wouldn't know. But it was a black box. And you maybe heard stories of this from other people who said, well, I have a broker. And what did that mean? There was no accessibility to these people because they were the only people out there who could actually do any financial transactions on the markets. It was this nebulous thing about this New York Stock Exchange, the floor in New York. How do you even get access to that kind of a thing? And then I think what happened is Charles Schwab, mainly as a company, was, I think, one of the first, what you would call today, a discount brokerage service.
Right.
And that democratized, in a certain way, the ability for people to invest on their own account. They could open up an online account. That was something kind of cool. Obviously, all this was predicated on the revolution of the internet. And you could buy and sell and trade and research everything on your own. When I think about, my mom had a brokerage account, and you had to pick up a phone, not a cell phone, and call the person and say, I want to buy a certain number of shares of the stock. And then that person went to some other place and then found a buyer and seller and open market. And maybe, if you were lucky, an hour later or maybe the next day, you got the deal done. And we know that everything today is completely instantaneous. Everybody has access today, which is something that you will appreciate. Think about this, really. For anybody out there watching this, you have access to more information today on the stock market and investment strategies and individual issues than anybody has ever had before. In fact, there's too much. Nobody can consume the amount of information out there on all these metrics, and every online platform has 100 different ways you can slice and dice your portfolio. So it's really overwhelming. Maybe that's one reason why people have gone the passive route, because they just feel like I can't, do all that stuff. It's way too much. But back to the point about active versus passive is maybe we can bring that home to the original point, which is taking ownership and really understanding, what is my money doing for me? Where do I have it allocated? And do I feel comfortable with that based upon my own parameters?
I love that. First of all, thank you for sharing that. And secondly, I completely agree. Where back then, my mother was telling me, and my grandparents were telling me that, if you had a broker, you were like, you're somebody,
Yeah,
somebody.
that was something impressive back
Yeah,
then.
they're like, wow, you know a guy who knows a guy kind of thing. And nowadays, it's like, oh, I have a stockbroker. Okay. I mean, it's lost its complete value.
Yeah.
And it was like, this is just unbelievable. But unfortunately, we're just coming up to our time. I just realized I do have another appointment coming up. But Grant, I do want to kind of circle back and kind of just go to the point you were talking about with information.
Yeah.
There's so much information on the internet right now. You know as well as I do, we have an untapped resource, which is basically the cell phone, the computer, just going to conferences like these. But how could someone like me at the age of 20, along with some of the peers listening in and some of the workers here at the Main Street Media Network, can kind of tap into the correct information? What should they look for to, one, take ownership and how to manage their accounts properly with the correct information? Like, for example, they go to their bank and say, well, my account's supposed to be making this much, but it's not. Why?
Yeah.
So what information should they follow? And how do you think they could take ownership with those accounts starting today?
Yeah, I'm going to reframe my answer a little bit to your question and talk about financial education. It's something that we don't do enough of in this country. In fact, I don't think we do much of it at all. And I'm talking about in the school system. I would love to see some kind of mandatory class for everybody in, say, junior high or high school to learn about fundamental financial principles. Credit cards, interest rates, home mortgages, auto loans, student loans, things that would be relevant to them fairly soon after that, to really have a basic understanding of what's the implication of taking on debt, for example, how to save, compound interest, different asset classes. I think that kind of stuff would be really, really helpful for people. But to answer your question a bit more about what can people do is, I think you want to identify and follow other smart people. That can be a network like this. So as one resource, there's lots of other ones out there. You don't have to become an expert in identifying stocks or analyzing securities or things like that. But you want to try to find multiple sources of things that you believe in, that you understand, people that you trust. Certainly asking around is always something that we've heard for millennia is, ask your friends, what are they doing? But the part about education I find so powerful, Michael, is that once you learn these principles and they're in your head, nobody can ever take them away from you.
I love that.
And I'll give you one example of Robert Kiyosaki's book, Rich Dad, Poor Dad, one of the real seminal works in this particular field. One of the things he said in that book, which was really amazing to me, is the difference between poor and broke. Have you heard this before?
Yes.
Okay. So for people who don't know that, being broke is really a moment in time. Right now, this week, this month, I'm broke. But poor is more a state of mind. And if you believe that and you have this tape player in your head that says, well, I'm poor all the time, then that doesn't allow you to get out of that state.
Right.
Whereas people who have financial literacy and financial savvy can solve the broke problem fairly quickly because they know how they can use money and leverage it for something better. So that's something I think is critical for people to think about, is equipping themselves. The one question that is asked a lot at investment conferences like this is, what's the best investment I can make right now? And the answer to that, me, is always invest in yourself.
Awesome. And that I 100% agree.
Yeah.
Because you are your most valuable asset. For those that are listening in, this is currently live at the New Orleans Investment Conference 2025. If you want more information about Grant and what he does, please email Grant Warden, GrantWarden, at mainstreetmedianetwork.com to learn more about Grant Warden, his mission, and what he does. And of course, to my audience out there, build yourself better and bigger every day. Live better, live bigger. Always move ever forward. And Grant, thank you so much for your wisdom and your insight today. It was a pleasure. Thank you so much.
Happy to be here.